So today we're talking to Guy Burdon from Ritz Finance. Guy's commercial banking guru, and it's time to get him in front of the Carpool Coach.
Mr. Bentley.
Mr. Burdon.
How you going?
Good, mate. Good to see you.
You too.
How's that seat? Do you want to go back a little bit?
Just a fraction.
Yeah, just down the side as per usual. So Guy, tell me a bit about your banking background.
Okay. I fell into banking by accident, actually. I was working for the federal government on a contract and met the then state manager here of National Australia Bank. This is the late 90s.
Yep.
And he took me under his wing, and I spent a year under a contract with him in the bank learning about banking.
Yep.
While I was there, I got the opportunity to go to CBA, and I spent 6 years there as their general manager of business bank.
Okay.
So it was a fantastic opportunity to learn from the ground up, and I could ask all the dumb questions.
Yeah.
And believe me, I asked a lot. So while I was there, I got headhunted and spent another 5 years with NAB in various senior executive roles, and so I worked in arguably the two biggest, one in the home lending consumer space and the other one in the business bank being NAB. But it gave me a fantastic insight into how they think,
Yeah.
let alone how they operate.
Sure.
And so 10 years ago, I set up this consultancy on the basis of, I can't be all things to all people, but if I can target a specific market above 5 million turnover, and it covers everything from medical to transport. And it's been an absolutely fascinating journey.
Yeah, I bet.
In fact, it's the longest job I've ever had, and it's become a lifestyle because I don't regard it as work. It's just the pure surprise on people's faces.
Yeah.
When I've gone in and had a look at their existing facilities. This is without looking at any new lending.
Yeah.
And then marry them with the appropriate people internally without having to move them. It just blows them away.
Yeah. What a great gig.
Yeah, it's fantastic. I love it. May end up with you at some point, I think. They've reached a turnover of about 23 million.
Yes.
And are realising now that they've got a tiger by the tail, and they're trying to work out whether they kick it to the next level.
Yep.
Or whether they pull it back or maybe sell it off. They're saying, when they were making 5 million, had 10 people working for them, they were probably making as much money then as what they are now.
Classic. Okay.
And so I had a long chat with one of the shareholders on the phone, who's a chartered accountant, by the way.
Yep.
So they wanted to mull it over the weekend and said they'd give me a buzz back this week. Generally, the client turns over somewhere between 5 million as a starting point to maybe 80, 85 million. Employ between maybe 10 to upwards of 400, depending on what industry sector they're in.
Yeah.
But essentially, the criteria has been built around the value I can deliver back.
Yeah.
So underneath that sort of level, unless they're rapidly growing, there's not a lot I can do for them in terms of savings and security and these sorts of things that I can look at and potentially return to them.
Sure.
But there's a very common theme that runs through the whole lot of them about they're all time poor.
Yep.
It's not necessarily an issue in the sense that they've got a problem with their bank. In most cases, it's quite the opposite. A lot of them are second or third generation and have just had no really significant advice on how to grow the business as much as anything from their bank.
Yeah. And
or any external expertise brought in from the bank, or for that matter, to a certain degree, from their accounting fraternity to look after them.
Sure. And we're interested in the client, helping them to grow, making sure they had the appropriate facilities in place, making sure they had the right deal and the client's not going anywhere. Is that fair?
Yeah, exactly.
Why would they? But it looks to me like, and I look at businesses that one go from that $3 million turnover to $30 million turnover, that struggle to grow, they've run out of security, the banks have got nothing for them and really not interested in them. And so we end up doing it through a debtor funding or invoice financing. We beg, borrow and steal to get the appropriate amount of capital that we need to help them to grow. And then when they're at a certain size and scale, all of a sudden the bank pops their head up again.
Oh yeah, God, yeah.
Which is really frustrating from my point of view, because that's that whole growth phase. They need the support, and that's where these fintechs are coming into the market, right?
Yeah.
Which you've referred to me and to my clients, and that have worked really well. But there really shouldn't be any need for them. Like, why the heck are we talking to fintechs when they've got a bank?
Well, particularly when the fintechs are doing, like one in particular at the moment is doing about 30 million a month, up to 250,000 in lending.
Yeah.
So
And
I did give some idea where the banks are at.
And it's quite expensive. And the frustrating thing is that the clients need it, so they're paying the money. The banks could be benefiting from that at a better margin, or at a better rate, but they're just not interested.
No. A good example. In the last month, we've done some modelling for a client that borrowed some money. It was probably about 16 million.
Yep.
And one of the major four have lent that money basically against the balance sheet.
Okay.
And the reason it was done against the balance sheet was because A, it was strong, and B, the cash flows had a lot of integrity in them, because through my services we employed their accountant to prepare them out for 3 years.
Yep.
And then we overlapped them and did them again with the covenant conditions from the approval.
Got it.
And so as a result, it's strengthened the relationship with the accounting practice without a doubt. And they now have a far better understanding of the growth and the potential of where that business is going outside of what I've been doing with them.
Yeah.
Now, the irony of that transaction was that, again, cold call. And the client themselves are based at a national level in quite a few locations, but predominantly started out of a regional area, 3 hours drive from Perth.
Right.
And to give you some idea of the lack of service, I suppose, of the banks, no major had ever been to their premises, and they're second generation.
Wow.
So that's sort of typical of the sort of client that I come across.
Yes.
And I think that the only reason I exist is because of exactly
That situation.
that example where they're not proactive.
Yeah.
To my knowledge, and having worked within the banks for a few years, that there's no KPI measurements around the bankers around retention of clients that have been with them for 15, 20, in some cases 30, 40 years.
Sure. How was that, mate?
Fantastic.
Painless.
Absolutely painless. What do you want me to pull out?
Yes, did funny. It's great. Beautiful work. With some of our Buddhist brothers. Mate, thanks for spending some time with the Carpool Coach.
Thank you.
Great.